Hello and welcome to this very special show on the Reserve Bank of India and how we can demystify it, how we can tell the public what the Reserve Bank of India is, what it does, how it can change your life, and also all the big questions on the major economic issues of the day. The RBI plays a role in all of that, and we are going to try and find out just what is going to happen to our economics and how it's going to affect each one of us. We are bringing the show to you live from the city of Chennai, and it gives me in particular great pleasure to be back here with all of you. Not least because I'm just flying in from Davos, where it was minus 27 degrees with wind chill factor. So it's such a pleasure to be back in slightly better climate conditions. And it gives me great pleasure to welcome, I think this is the first time that I can ever recall on any television program, the Governor of the Reserve Bank of India and all the Deputy Governors together on one platform. So I'm going to ask you all to give them a very special round of applause. And let me just start by doing the introductions. The Governor, Dr. D. Subbarao, it's wonderful that you are here to take questions from the public as to what's happening in the economy, what's happening to the bank, what's happening to their finances, that and a lot more. We're going to be taking their questions and putting them to you. To his right, Mrs. Usha Thorat, great to have you with us. To his left, Mrs. Shamla Gopinath, thank you as well for being with us out here. Dr. K.C. Chakrabarti, wonderful to have you with us. And Dr. Subir Gorkarn, whom we have had on a panel discussion like this, at least I have on NDTV before, but it's wonderful to have you here on the stage. So the format essentially is going to be, this is really your show. You can ask all the questions that you've been wanting to ask from the Reserve Bank of India. But to try and get some structure into it, I'm going to try and divide this up into 2 or 3 sections, if that's okay by you. Let's start off by asking some broader questions on the economy, on the world, on whether the world's recovered from recession, is it going to go back down or not. So some overall questions. Then I know many of you have been telling me that you wanted to ask questions on prices and on inflation. We can turn to that next. Then questions on foreign exchange, we'll come to that. Banking crisis, banking regulation, that, and then all questions directly related to you and bank accounts and how the banking system should be regulated, anything else. So let's just try and keep questions in that order. And let me exercise the right to ask the very first question to you, sir. And again, coming from Davos is the big question that everyone was asking. Is the crisis over? And is it definitely over for India? Is there the possibility for a double dip? Are we going to go back down?
Thank you, Vikram, for that question. But before I answer that, I want to say that on behalf of Reserve Bank of India, we're all delighted to be here in Chennai talking to all of you. This is the Platinum Jubilee year of the Reserve Bank, and the theme of celebration of the Platinum Jubilee is reaching out to people. And this show on NDTV is our effort once again to talk to people, and we thought what better place than Chennai to come and talk to an informed set of people. Now to come to your question, yes, the crisis I believe is behind us, because those of you who've seen our recent policy document last week would have seen that we've said very clearly that our attention is shifting from managing the crisis to managing the recovery. So the big challenge for the Reserve Bank now is to manage the trade-off between growth and inflation. Prices are going up. At the same time, we have to ensure that growth continues.
Dr. Gokarn, if I can just get you in on that, when you look at the world around, what probability do you think there is that the rest of the world will hit some sort of a double dip, and to what extent do you think that would affect India, if that happens?
Well, since Chennai is a city well known for its medical facilities, let me use a medical analogy to try and explain the situation. A little over a year ago, the world economy was in intensive care, and governments just had to pump every possible drug into it to keep it alive and hope that it would recover. 6 months later, there were signs of revival. Different parts of the global economy reacted differently to the stimulus. It was common stimulus, but different parts reacted differently. And that unevenness is still showing up. Different parts of the world are recovering at different rates with that infusion. So now there are two uncertainties going forward. One is whether the parts that are recovering more slowly, which is essentially the US, Europe, and Japan, will actually continue on the recovery path or not, because there is a risk that they will just stagnate. And the other is that in the course of this recovery, what governments have to do now to move from intensive care to the hospital room, so to speak. So there are uncertainties in how this treatment is to be withdrawn. If you do it too quickly or take out the wrong things at the wrong time, there is a risk. So I think there are risks, there are uncertainties about how this process will unfold. But we've certainly moved from intensive care to, say, back to the hospital room, and perhaps, there is some reasonable prospect that we'll be released from the hospital sooner rather than later. But the uncertainties remain.
I love the medical analogy, and so seeing as you're one of the lead doctors in this entire process, I guess, and there's the budget coming up as well, which everyone's going to be looking at. Do you think it is time to start withdrawing the stimulus? Now, you've just taken one drug away by raising the CRR a little bit, but is it time to keep on doing it, or do you think the patient is still too critical?
No, we have to keep on doing it. It's a question of how we calibrate that over time. Both the Reserve Bank and the government will have to withdraw from the expansionary policies they followed. And it's important that both the Reserve Bank and the government do it in coordination. Because if the Reserve Bank exits and the government continues with the fiscal stimulus, it's not the best thing to happen to the economy. So we have said in our policy document last week that just as the Reserve Bank has reversed its expansionary stance, the government too must withdraw the fiscal stimulus.
Right. One of the questions that many people have been asking is, we were in many ways better regulated than the rest of the world. We did not go through all the excesses that others did. Why at all was India affected by the crisis to start with?
The developments that happened overseas impacted the real sector in India, and the impact on the financial sector was through the real sector. The other channel, this is the financial channel, the confidence channel. When certain, particularly after the Lehman, these developments happened overseas, that also impacted the confidence levels in India, and to some extent it did impact the forex flows. It impacted the way in which our corporates could access foreign currency credits. It impacted the trade credit which they were raising overseas. So it was really not directly the financial sector, because the financial sector was not in crisis in India.
The question which I guess many people would also ask is, so therefore was it a good thing that India became globalized? And slightly related to that, the amount of regulation that we've been doing of the banking sector, was it just the right amount? Was it too much? I mean, people earlier used to say it's too much. Now I don't think people are saying that anymore.
There were many things that the Reserve Bank was doing which is now being advocated as part of regulatory reform. And one of the things that we've had a fair amount of regulation on banks' exposure to what are typically sectors which lead themselves to bubbles. And we've also had a fair amount of regulation on the extent to which banks can deal in exotic products. And overall, we've had the capital account controls, and therefore to that extent there has been a certain degree of insulation. So I think it's fair enough to say that even when there was excess, there was huge amount of liquidity in the rest of the world, there were measures in India which were, which what we now call as counter-cyclical, which were really in terms of, putting brakes on the system from getting leveraged.
Before I turn and take the first question from the audience, anything you would like to add to this on the big global picture?
No, you see, there is nothing to add. All has said. What we say that today, you see, this particular crisis has happened. The epicenter was USA, and that plays a very great role. And that's why almost all the countries will be affected, because that is the main economy of the world. The powerhouse is that. So whatever we may have done, but partly will be affected, because the Asian crisis was there only one part. But when anything happens in the USA, entire globe will be affected.
I am Mrs. Bala Natarajan.
Yeah.
Such being the case, as you all discussed now, why should there be an increase in the CRR? When you have withdrawn so much money from the system, the balance money in the system, is it sufficient enough to actually meet the requirements of the potential borrowers, sir?
Okay, your medical treatment is being questioned. Should you have withdrawn this right now?
Thank you, Mrs. Natarajan. Thank you for that question. You know, we've been saying for a long time, since October actually, that we have to exit from the accommodative monetary stance, because in the wake of the crisis we've done a number of extraordinary things, and it's very important that we withdraw them, but we withdraw them in such a way that it's non-disruptive. Raising the CRR as part of the policy last week was part of that exit process. As I had said in the press conference last Friday, we debated a number of options, whether we must raise the CRR, raise the policy rates, etc. In the event, we decided that we will first raise the CRR, because what the CRR does is to withdraw liquidity from the system. And withdrawing liquidity from the system is important to anchor inflation expectations. Okay? Inflation is an important concern, and controlling inflation is the dharma of the central bank. If you ask me what's the dharma of the central bank, I would say it's controlling inflation.
Right. I'm going to turn to the dharma which you were just talking about of fighting inflation, because if there's one thing that affects the common person a lot, and which a lot of people have been getting agitated about, it's been inflation. In particular, the rise of food prices. Now, I'm sure a lot of people would be wanting to ask this question, what can be done about it? I don't know how much you can specifically tackle on inflation as a bank, but maybe you could just shed some light on this.
Okay. We've had inflation, you know, in WPI inflation, the wholesale price index is the dominant measure of inflation that we use in the country. Okay? That was 7.3% in the month of December, year on year. That means prices have gone up, wholesale prices have gone up by 7.3% between December 2008 and December 2009. But that is not the actual measure of inflation. All of you go to the shops, go to the bazaar and buy stuff, and you know that prices are increasing much higher than 8%, because consumer prices have gone up even more. The main drivers of inflation are food prices, mainly vegetables, pulses, food grains, milk, egg, meat. Those prices have gone up more than other prices. It is the responsibility of the Reserve Bank to manage inflation. But when inflation comes, as it has now, from the supply side, what we mean by supply side is that Kharif rainfall had been deficient, food production was lower than we had expected, therefore there is less supply of food than is the normal case. Because of supply side pressures, there is inflation. When inflation arises from the supply side, the ability of Reserve Bank to manage that is more limited.
Dr. Kokran, let me just turn to you on that point. Do you think this is in many ways the first thing which the RBI should continue to worry about? And also, is there any trade-off between cracking down on inflation and hitting growth or hitting the recovery?
Well, I think, since Chennai is also known for automobiles, let me now use an automotive analogy.
Okay.
Which Mrs. Thorat already started off by saying, using the term, the brake metaphor. It's a situation where the idea of inflation moving from food to other items to becoming what we call generalized or broad-based really depends on how close the economy is to its capacity, its peak capacity, its maximum capacity. As this capacity utilization goes up, high input prices across the board tend to spill over into high output prices. So the risks increase. There is nothing guaranteed about this, but the risk of food inflation translating into a more generalized inflationary process increase as the economy starts to grow at a faster rate. So we've seen a recovery in the economy, as I said in response to the previous question. We have reasonable comfort in the fact that the economy is recovering. If it continues along this path, at some point this food inflation is going to become a problem across the board.
But would
So
hitting
the
it
idea
hit
is-
growth?
Well, that's the point. That, you know, do we let it happen and then sort of slam the brakes on, which could be very disruptive? Or do we anticipate it and sort of start to gradually rein things in, which may hurt growth a little bit, but will not be as disruptive as the second option? So, in a sense, this exit process, which we've been discussing in so many different contexts, essentially is to try and take away all those infusions without disrupting the economy, and I think that's really the objective. So, whether it hurts growth or not, I think is not so much the question as whether it is going to destabilize the recovery. And what we believe is that the way in which we're going about it is not going to destabilize the recovery.
Okay, let me just, before I take some more questions from the audience, I want to do some quick unscientific snap polling. What the governor was saying, that the dharma of the Reserve Bank of India is to worry about inflation. How many people in this audience think that that is the single biggest thing that the bank should worry about? Inflation and price rise. How many feel that? Okay, it's not unanimous, but it's a majority. How many people feel that above all we should make sure that the recovery is not affected? How many feel that? Okay, so that's a minority. I'm not quite sure what the others are feeling. They're trying to, I think, make up their minds as to what exactly you should do.
Do you see an age differentiation in that? The younger people talking about growth and the middle-aged people worrying about inflation.
That's actually a very interesting point. That's a fascinating point. But then hang on. Then there's a very interesting corollary to that. If India is by and large a young country, maybe we shouldn't be worrying about inflation and should only worry about growth.
Well, we need to worry about everybody.
Yeah,
but yes.
Welcome back to this special program. We've got the Reserve Bank of India governor and all the deputy governors here taking questions on the economy, on the banking system from the very large audience that's gathered out here. But Dr. Subramanian, I just wanted to turn now my attention to the question of inclusive banking a little bit. And surely one of the biggest problems that you must be trying to figure out how to tackle is how do you get banking to all the poorest of the poor? It's one of those paradoxes that anybody can, even if he's running a very dodgy company, can easily get a bank loan to go and buy a 70 lakh rupee car. But sometimes the poorest of the poor can't get a 500 or a 1,000, 2,000 rupee loan to be able to set up a small shop or to buy a cow or things like that. How can we fix this?
Just to give you a few details of what we're trying to do. One big help has been technology. We no longer need to have a brick and mortar branch. I know 30 years ago when I used to work in a district, when you said expansion, it meant that you had to have a building, a branch manager, staff, all the paraphernalia of a branch. But now it's possible to do banking without a brick and mortar branch. We have banking correspondents. We have technology to reach out to people. Those of the people in this audience who've seen the exhibition outside would have seen some amazing technological developments. Just with a handheld device in any remote part of the country, it's now possible for illiterate people just with the thumb impression to do a banking transaction right there on the spot. Okay? Now, what we've done so far is very marginal compared to the size of the problem. Okay. And the challenge ahead is very formidable.
Slightly related question, which was related to what Dr. Chakravarti was saying also. The return, if it's high enough, all the money will come back here. Now, the minute that starts happening, you've got another problem, haven't you? Which is what happens to the rupee. And that's a big concern right now, that the rupee is starting to shoot up and exporters are now lining up to you and saying what? It's a very strange paradox. For so many years, one of the biggest problems that the bank has always had is how do we prevent money from going abroad? Now, when the money comes back in, how do you prevent the rupee from appreciating? There's always a problem. How do you handle this?
Yes, I think this is a good problem to handle, when I think of the, problems we had prior to the Asian financial crisis, and when we think of the 1991 BOP crisis, when we were really scraping the, bottom of the barrel and we didn't have foreign exchange, I think we are now really gone far ahead, and it's I would say a good problem to have, managing capital inflows. To the extent that the capital inflows help in absorbing, we are able to absorb these excess flows. It's a very positive thing. We do have a current account deficit, and the capital flows help us in absorbing the current account deficit. Where the problem comes in is the excessive capital inflows which the economy is not able to absorb, and for that actually India is among a few other countries. We have a capital account management framework. We do look at different kinds of flows, the nature and the volatility of the flows. So we have equity, we have debt, and we have different forms in NRI remittances. So what we've tried to do is try to manage the capital account where it's feasible and probably least disruptive, and which will not affect the confidence of the foreign investors. So that is how we manage our capital inflow, mainly management of the external debt.
One thing is to manage the inflows. The other challenge is what you manage with the exchange reserves that we have, and India has got some large reserves. You must be among the many central bankers who are perhaps concerned about the dollar, what's going to happen to the dollar. Should we diversify from dollars into gold? I know that we sent a signal to the rest of the world when we deployed some of our reserves and bought gold with it. Is that something which we could do again?
I cannot at this time say whether we're going to buy gold or not, but we have, I think, $285 billion of foreign exchange reserves, and the size of the reserves is one of the things that protected us from the worst impact of the crisis. Now, if you look around the world, you will find that Asian economies which had built up reserves have insulated themselves from the worst impact of the crisis, and that's been true of India too. We manage our reserves in order to, there are three considerations. I think we want to maintain liquidity, we want to maintain safety, and we want to get a reasonable amount of return. Our reserves are quite well managed, quite diversified, and we actively look at the movement of currencies around the world in order to manage the portfolio across various currencies. We don't normally discuss this in the open, but let me assure all of you that there are experts in the Reserve Bank who do this in the best interest of the country, and over time their record has been very good. So good that some of the other central banks ask for our expertise in reserve management.
Right. Well, I guess that's fair enough, and I know why you can't discuss it openly. If you were to actually say that we are dumping all our dollars, I wonder what would happen to the value of them, or the reverse for that matter. If I can just get a closing comments now from you, sir, before we end this.
I want to say that the last 1.5 hours has been delightful, listening to your questions, very informed questions, and it's given us an opportunity to let you know what we do in the Reserve Bank, and also given us an opportunity to learn of what you think we should be doing. In passing, I want to say that our primary responsibilities are to manage inflation, to ensure that the financial system in the country is safe, that you put money in banks and other financial institutions that is safe, so that there is financial intermediation in the country. We are also issuers of currency. We're also debt managers for the government, and most importantly, we're also concerned about growth. Some of the youngsters here who study about central banks and what they do around the world, you will find that the Reserve Bank of India is different from all other central banks because our mandate is very wide. Not only do we do everything that other central banks do, but we also have to support the growth of the country. So I want to say once again that it's been a delightful hour and a half that we spent here. Thank you very much.
Thank you all so much for being with us. My deep apologies to those of you who have not yet had a chance to ask your question. Perhaps if you could leave your questions in writing with us, we can get them to the Reserve Bank and perhaps get you answers to any other questions that you may have. We can also get a forum up and running on ndtv.com, and we will on any other suggestion that you have, and we'll try and take those comments. But I'm afraid that we are going to have to end the program out there. Thank you all so much for having joined us in such large numbers. And once again, my apologies to those of you whom we couldn't get in. Thank you and goodbye. Thank you.